Pennie Loans Reviews Pricing explained what you get for your money. When you're in need of quick cash or short-term funding, loan apps pop up everywhere. One such service is Brand, Pennie Loans, 0, but most people get this wrong. They look at the advertised amount and ignore the real cost. Here's how to navigate the pricing. Loan offers often highlight up to 10, 0 in minutes or fast approval. What you may overlook: interest rates, processing fees, late payment penalties, and how much a loan really costs you over time. For example, a 5-0 loan for 30 days might cost you 1-0 in fees and interest at an effective rate of 20% for 1 month, which annualized to over 200%. What you get: access to quick funds, no collateral, speed of approval. What you give up: higher costs compared to traditional banks, potential debt traps, and possibly credit score impact. Many users report that easy payday loans turn expensive if you roll them over. Here's how to evaluate. Step 1. Check the total repayment amount, not just the principal. Step 2. Note the term: 7 days, 30 days, 90 days, and how the cost changes. Step 3. Check hidden fees: processing, dispersal, late fee. Step 4. Compare with traditional loan rates through banks or credit unions, maybe slower but cheaper. You won't believe what happens next when you underestimate the cost. A small loan becomes big burden when you roll it over or miss repayment. The surprising truth: the fastest loan isn't always cheapest. Value comes from understanding how much you pay, when you repay, and while you really need it. In conclusion, if you absolutely need short-term cash and can repay promptly, Pennie Loans might serve. But if you're unsure or might carry the debt beyond the term, look at Saver, lower cost financing options. Thanks for watching. Subscribe for more finance tool reviews and how to manage what you're really paying for.